Hi everyone and welcome back to the channel. This video will be part one of what I think will be a 2 or 3 part dividend income, dividend investing series. I'm starting out super basic today, learning the foundation of dividends by answering the top 8 or 9 frequently asked questions. What is a dividend? Why do companies pay dividends? How often can I get paid? What do the dates mean? Is higher yield better? Are they guaranteed? Can they go up? Can they go down? And lastly, how do I buy them? The next video will probably outline the dividend reinvestment plans or DRIP, dividend growth, and the power of long-term investing. Before we get started, please give the video a like and subscribe to the channel. I've also made a free ebook breaking down some Canadian finance and investing tips for beginners if you're interested. I'll leave a link if you want to sign up for some freebies, and then obviously I'm going to use your email to sign up to market my Canadian finance course. Right now, I think it's around 61, 62 videos over 8 hours long, and it also includes a one-on-one 1 hour Zoom chat with myself. Getting right into it, number one, what is a dividend? There are a few types: cash, stock, and one-time dividend. We'll be focusing on the most common and the most lucrative in my mind, the cash dividend. It is a cash payment for simply owning shares in a company. Since you own shares, you're an owner, and as an owner, you're taking part in the profit of the company. I recommend opening a brokerage account with Questrade or Wealthsimple. If you buy a dividend stock with one of these, you'll get a cash payment. Like this, I own Apple stock. I've owned around 200 shares for, let's say, 12 years. They pay a small dividend, and I get paid just for being an owner. How often can I get paid? There are a few types. There's annual, which I don't like, and they're pretty rare. There's quarterly, which is great, and then there's monthly. I like monthly because I'm a sucker for the instant satisfaction and the dopamine hit I get every time I see a few $100s in my account. If I see a dividend yield at 4% and they pay quarterly, does that mean I get 4% quarterly? The yield is yearly. You'll be getting 4% per year, but it's paid quarterly. So 1% a quarter, you'll get that 4 times, so 4% a year. Why do companies pay dividends? Normally at the beginning stages of a company, you don't want to give away all your cash. You want to use it to reinvest in the business. But every business, I'm sure, hits a point in their life cycle where they won't be growing at a 20% pace every year. They've stabilized, they're successful, and now they have a boatload of cash, hopefully, that keeps growing, and there aren't new places or investments to put it in, and that's where dividends come in. It's rewarding the owners. If you just take a look at Microsoft, they started to pay a dividend, I think, in 2003. And then Apple, I think it was 2017, where they decided to pay their first dividend. They simply couldn't invest or reinvest their cash fast enough. There weren't enough places. It's also because of antitrust laws where they were barred legally from buying out all their competition, so they can't create a monopoly. But that's a topic for another video. They started paying dividends because of all the cash they have, and they still have a lot. So technically they can increase. But for Apple, you shouldn't buy it for the dividend yield. I bought it when there was no yield. I bought it for the capital appreciation. The dividend is a nice little bonus, which I'll gladly take. What do the dates mean? These aren't that big of a deal. They only matter when you're buying or selling. Worst case scenario is you miss out on one dividend payment. It's not the end of the world, I guess. It's still important to know, if you plan to sell, let's say 100 stocks, and you sell one day, like at the wrong time, you miss it by one day, you could potentially miss 100 dividend payments, which I guess adds up. But here are the dates you should know. You should know what ex-dividend, record date, and payment date mean. Ex-dividend. After this date, no new shareholder is owed a dividend. For an example, let's use January 28th as this date. Record date is the date at which current shareholders are owed a dividend. Let's use January 29th as the date for this example. Finally, payment date is obviously any shareholders who were eligible to get paid will receive their payment. Let's use February 15th. If you buy a share on the ex-dividend date, you will not get a dividend. You will need to buy on the day before. If you sell a share on the ex-dividend date, you will get a dividend. So if you buy on January 28th, no payment. If you sell on January 28th, yes payment. If you sell after the record date, but before the payment date, you will still get paid. If you sell on February 1st, 2nd, 3rd, 4th, you will still get a payment on February 15th. You do not need to hold until the payment date to get the dividend. Just to be on the safe side, buy before the ex-dividend date and sell after the record date if you wish to do so. Does a higher dividend yield mean a better investment? No, it might be tempting to go for high yield because more yield means more money, right? For the short term, yes, but not for the long term. I personally try not to grab stocks over a 7% yield. Anything more appears to be unsustainable, mainly because the dividend payout ratio would be too high. This represents the dividend to earnings ratio. If the stock drops temporarily, the yield might go to 7.5 or 8%. I usually won't panic sell because stocks fluctuate. You have to give them a little leeway. However, if the yield creeps up to 9, 10, then 11%, I do start to get a little worried and would consider selling. Take Northwest REIT as an example. The stock was $14. The yield was 5.7%, which was a healthy yield in my opinion at that time. Then the price started to drop, $12, $10, then $9. The yield was like 8.8 or 9%. The stock dropping is a red flag, signaling it's in trouble. I'll show you what happened to the stock and the yield a little later. You need to find stocks with a comfortable medium. You want a relatively safe dividend that will be sure to continue to get paid, like 4%, 5% are great. I kind of like 6 to 7% stocks as well, like I don't mind a little risk. Let's use recent yield traps that people have been following over the last year. A year ago, a company called YieldMax created a few covered call ETFs, but aggressive ones. You'll see this Tesla covered call ETF, the ticker is TSLY. The yield is great. Look at it, 85%. It sounds good, right? But like I said a little earlier, 7 to 8%, anything above is risky. So 85 is definitely a red flag. If you look at the stock performance, it's down 53% or 55% over the last 12 months. The distribution is too high. Is it sustainable? Personally, I don't think so, unless the underlying Tesla stock increases rapidly, but it's too volatile for me. I just see people losing money here. Are dividends guaranteed? No, they are not guaranteed. A company missing a dividend payment must be in serious cash trouble. It's not a big deal if they have one bad quarter where you see losses, but sustained losses are obviously another issue altogether. And another obvious, if a company misses a dividend payment, a quick and drastic drop in the stock price is for sure coming. It's definitely not a good sign. I know this is a basic beginner video, but as you learn more and you get more advanced, you start to do more research, you could start to look at the cash flow from operations to see if their normal operations produce enough cash to cover all the payments, but maybe that's a topic for another video. Can dividends go up? Yes, usually when a company is confident that they can sustain the payment going forward and the cash and resources are available to reward their investors, they'll increase the dividend. Examples are Enbridge, Coca-Cola, TD, RBC, I can probably name 100 more. All the recent dividend stock videos I've been making, I'll post a few of them here. I only focus on dividend stocks that increase their payment. I'm not looking for static income, I'm looking for growth. Now, can dividends go down? Yes, this is one I experienced personally. In 2015 or 2016, I was being too passive with my stocks and didn't check a company's yield was jumping 7% to 13%, and the stock was obviously dropping. And they ended up slashing their dividends in half by 50%. It was Slate Office REIT. Obviously, they hit a few quarters of hard time and even worse off now. I think I had it at $9 and it's at 41 cents now. They had poor cash flow. They slashed their dividend stock. They slashed their dividend and the stock took like a 50% drop immediately. During the pandemic, First Capital REIT and RioCan cut their dividends by 50% and 30%, but were later able to restore the payments, which is rare. Usually when a stock cuts, it's likely never to return. Back to a previous example, Northwest REIT, their stock dropped from $14 to $9 to $8. I experienced this before at Slate REIT. I saw the dividend cut coming. I got out early and was thankfully still profitable at the time I sold. Northwest ended up cutting their dividend by 55%, and it's likely never to recover, mainly due to poor management, but that's a topic for another video. How do I buy dividends? I mentioned previously, I recommend opening a brokerage account with Wealthsimple or Questrade. When you're opening an account, they'll ask you a few questions like, do you want to open a margin account, RSP or TFSA? I always recommend investing in tax-sheltered accounts first to avoid tax and take advantage of the accounts that are legally obligated, legally available to you. I would recommend using an RSP or TFSA, invest in dividend stocks, use these tax-sheltered accounts to increase your overall returns. That's all for this video. Please stay tuned to my next video, maybe not next week. I might leave a few videos in between just to drag it out a little, make it a little more interesting. I'm going to explain dividend growth and explain DRIP and the power of compounding. That's all for this video. Thanks for watching and tune into the next one.